Pop quiz, Junior.
How much money would you have made with a $10,000 investment into the S&P 500 over the past 10 years if you only reinvested your dividends?
That's easy.
If you said $33,777.12, that would be both oddly specific and correct. So nice work, cheater.
You can't prove anything.
That return from the S&P 500 is so good, in fact, that if that was your only investment, statistics show that you would have been in the top 13% of all investors, which is certainly nothing to sneeze at. With that being said, some of us, me included, want to make it our mission to see if we can do even better, and that's where I come in with these lists. Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations. You just found the only weekly stock list you're ever going to need as a dividend investor. Every single Friday at 8 a.m. Central Standard Time, I share with you 5 dividend stocks that have crushed the S&P 500 over the long haul and have metrics to support they could keep on doing so. If you call yourself a dividend investor and enjoy money, make sure you leave a like on this video to show your support. Make sure you're subscribed so you don't miss any of my future content, and make sure you're ready to jump right into this week's list with number 5, Equity Lifestyle Properties, stock ticker ELS. Today marks the first time I'm bringing up Equity Lifestyle Properties here on the channel, so let's go ahead and get a look at the numbers behind this stock. ELS is a quarterly payer in the real estate sector, paying $1.91 per share per year with a forward dividend yield of 2.5%. ELS has been paying and growing their dividend over the past 20 years. They have a 3-year dividend growth rate of 9.48%, a 5-year dividend growth rate of 9.74%, and a payout ratio of 64.89%. Now, at the time of recording, Equity Lifestyle Properties was trading 0.29% off of its 52-week high. It has an ex-dividend date of September 27th with a payout date of October 10th. And looking at this chart, you're going to be able to see the growth of a $10,000 investment while only reinvesting those dividends into this stock versus the S&P 500. ELS would have brought back $45,054.18, which outperformed the S&P 500 by $11,277.06. Coming in at number 4 on this week's list is WR Berkeley, stock ticker WRB. This is also the first time I'm bringing up this stock here on the channel, so let's go ahead and look at the numbers behind this one. WRB is a quarterly payer in the financial sector, paying 32 cents per share per year with a forward dividend yield of 0.55%. WRB has been paying and growing this dividend over the past 22 years. They have a 3-year dividend growth rate of 11.27%, a 5-year dividend growth rate of 10.49%, and a payout ratio of just 7.39%. Now, at the time of recording, WR Berkeley was trading 4.8% off of its 52-week high. It has an ex-dividend date of September 23rd with a payout date of September 30th, and that $10,000 investment into this one versus the S&P 500 would have brought back $50,441.53, outperforming the S&P by $16,664.41. Earning the bronze medal this week, coming in at number 3 is Danaher, stock ticker DHR. This is now the 3rd time I mentioned this stock here on the channel, and if you go all the way back to the very first time I mentioned it back on June 17th of 2022, DHR is underperforming the S&P 500 since then, but I want to show you the numbers of why I still really like this stock long term. DHR is a quarterly payer in the healthcare sector, paying $1.08 per share per year with a forward dividend yield of 0.39%. DHR has been paying and growing their dividend over the past 10 years. They have a 3-year dividend growth rate of 10.42%, a 5-year dividend growth rate of 9.74%, and a payout ratio of just 12.51%. Now, at the time of recording, Danaher was trading 2.64% off of its 52-week high. It has an ex-dividend date of September 27th with a payout date of October 25th. And looking at this chart over the past 10 years, DHR would have turned $10,000 into $55,976.24, which outperforms the S&P 500 by $22,199.12. And we're now halfway through this week's video, so if you haven't already, make sure you leave a like to show your support. And I really want to hear from you guys down in the comments. Let me know if you guys own any of the stocks I mentioned in today's video and how they're doing for you. And if you don't own any of them, which ones piqued your interest the most. But now let's get to number 2. Coming in at number 2 on this week's list is Bank First, stock ticker BFC. This is now the 5th time I mentioned this stock right here on the channel, and if you go all the way back to the very first time I talked about it on June 17th of 2022, BFC is also underperforming the S&P 500, but I have a lot of faith in this one going forward, and I want to show you why. BFC is a quarterly payer in the financial sector, paying $1.60 per share per year with a forward dividend yield of 1.76%. BFC has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 24.46%, a 5-year dividend growth rate of 16.06%, and a payout ratio of just 21.78%. Now, at the time of recording, BankFirst was trading 5.42% off of its 52-week high. It has an ex-dividend date of September 25th with a payout date of October 9th. And looking right here, a $10,000 investment into this one over the past 10 years would have brought back $51,175.92, which outperforms the S&P by $17,398.80. And here we go. Number one on this week's list is Logitech International, stock ticker LOGI. This is the very first time I'm mentioning this stock here on the channel, and I'm super excited to bring you guys the information behind this stock. LOGI is an annual payer in the technology sector, paying $1.37 per share per year with a forward dividend yield of 1.59%. LOGI has been paying and growing their dividend over the past 10 years. They have a 3-year dividend growth rate of 39.8%, a 5-year dividend growth rate of 28.14%, and a payout ratio of 27%. Now, at the time of recording, Logitech International was actually trading 16.1% off of its 52-week high. It has an ex-dividend date of September 24th and a payout date of the very next day on September 25th. And looking at this chart, you'll be able to see why I really like this stock. A $10,000 investment 10 years ago into this one would have turned into $77,833.52, which outperformed the S&P 500 by $44,056.40. With that being said, if you made it here to the end of the video, but you're watching this on or after September 23rd of 2024, it would be in your best interest to make sure you're subscribed.
Why is that?
Yeah, why is that?
Well, simply put, this is because some of the ex-dividend dates I mentioned in today's video might have already passed, which means you just missed out on the next dividend.
That's not very important.
Now, of course, that's not the end of the world, but most of these stocks are quarterly payers, and one of them is even an annual payer, which means you need to wait at least 3 months for your next dividend, and we all know
ain't nobody got time for that.
Before you go, don't forget to use that comment section down below to let me know if you guys own any of these stocks and how they're doing for you. And if you don't own any of them, which ones piqued your interest the most. And if you enjoyed this video and you want to see more just like it, make sure you check out this video right here. But until next time, see you.